All right, welcome everyone to today's series, today's episode of Discover Real Estate Miami. And we've made this series of webinars to be able to educate what our buyers and investors that are looking to invest and really take advantage of what is the Miami real estate market and why it's so hot right now. And today we want to give you guys something very special for all investors that really everyone should be very aware of, which is the 1031 exchange. We'll be talking about that in detail. We have a specialist with us today who will be presenting a little bit, but really today we want to talk about exactly what makes this so beneficial and why it makes it so impactful in today's market right now. And my name is Felipe Ayubi. I'm a real estate specialist and realtor located here in South Florida. I am someone with 7 years of experience in this industry. I love what I do. I love helping out real estate investors, being able to find that next deal, to be able to find the best property for what you're looking for. And I am a person that is associated, well, a realtor, part of eXp Realty, the world's largest real estate brokerage. And I am just absolutely in love with what I do to be able to help out people.
Well, hello, Felipe. My name is Yadira Rubio, and as well as Felipe, I'm part of eXp. Love what I do. I have over 20 years of experience, a little over 650 transactions. I do new development. I help investors, resale. So I love what I do. So so happy to be here tonight and so excited about the information that we're going to learn about.
Awesome. And today we have, like I said, a specialist in what is a 1031 exchange, the person that will be able to really answer all the questions and explain the 1031 in detail of why it's so good. Today we have Janet Shum with us. Welcome, Janet. It's really nice to have you here today with us and really just amazingly beneficial for all of our audience here today.
Awesome. Thank you so much for having me. I'm, of course, Janet Shum with Old Republic Exchange Company. I have more than 25 years experience in the industry. My sole role is to facilitate the 1031 exchange. Today, we're going to talk about why people do a 1031 exchange, what is an exchange, when you should consider an exchange, why it's important to work with realtors such as yourselves who are experienced in the 1031 exchange, and why you need to work with a qualified intermediary and the benefits of an exchange. So we're going to talk about lots of good things. A lot of people don't know about the 1031 exchange, and that's what we're going to change today, hopefully. So
Awesome, Janet. No, thank you for being here with us. And for those of you that have any questions, please feel free to ask directly to our phone number in direct message us. That way we can certainly help you out with the best answer, the most personalized answer that we can give you, depending on exactly what you need. So yeah, if you want, Yaira, why don't we start? Let's ask Janet a couple questions, and obviously, for her to be able to get into the presentation and really explain to our audience today what a 1031 is.
Yeah, so thank you again for being here with us tonight. I think this is great information what you're going to share with us. So we're going to keep it simple. So if you guys need any more information, Janet will be available for private Zoom meetings and transactions as well. So Janet, just tell us, what is the 1031 exchange? I mean, it even sounds weird. So can you tell us why? You already mentioned the things that you're going to talk about. So we're going to let you do your thing. So thank you so much again.
no problem. I can go ahead and share my screen. Let me see. Let's get that up here. And let me know if you can see it.
Yes, we can see it.
You can see it. Okay, awesome. Okay, so let's just kick it off with what is a 1031 exchange? Here we go. So a lot of people don't know about a 1031 exchange, and a lot of times they don't even know about the exchange until they talk with the realtor. And the realtor basically is kind of the first line of defense. You need to know about the 1031 exchange. The 1031 exchange is a way for real estate investors to fully defer capital gains tax on the sale of investment property as long as they buy another property of equal or greater value. So if you have a property that you've held for investment we like to see a couple of years owning the property, and you use it as a rental or for business purpose, any type of investment use. If you use the proceeds of the sale of investment property and buy another property of equal or greater value, it allows the taxpayer to fully defer the capital gains tax on the sale. It's actually one of those tax loopholes that you hear about, and it is a legal tax loophole. It's definitely something you can do, and like I said, not a lot of people know about it. It's kind of one of those niche things, but we are seeing more and more real estate investors participating in the exchange. And I myself personally have facilitated hundreds of thousands of exchanges. So Old Republic Exchange is a nationwide company, so you can sell property in other states like California or New York or New Jersey and reinvest the proceeds of the sale of those properties into properties here in Florida. And a lot of my clients are moving their real estate from those areas because Florida obviously is growing, especially the Miami area. It's a great place to invest in for sure. But the Internal Revenue Code, it actually comes from IRS Section 1031, and it provides that a taxpayer can sell property and defer payment as long as they're buying something of equal or greater value in like kind. So like kind is kind of a little bit of a confusing term. It can be any type of real property that you sell and buy in a 1031 exchange. So you can sell a single family home that you use as an Airbnb and buy like a commercial warehouse, or sell a condo and buy a multifamily home. Any type of real property qualifies. And Section 1031 of the tax code specifically states that no gain or loss shall be recognized on the exchange of property held for productive use in a trade or business, or for investment if such property is exchanged for solely of property of like kind, which is to be held again for either productive use in a trade or business or for investment. So if it's a second home that you're selling, but you're not actively renting it out, something like that may not be seen as like kind in the eyes of the IRS. So we do want to be careful. And anytime you are contemplating a 1031 exchange, you certainly do want to have the advice of your tax advisor as well. Companies like ours, you know, we're qualified intermediaries. We're qualified to facilitate the exchange, but we don't give tax or legal advice. So it's important that you do seek out the advice of a CPA prior to engaging the services of a QI. And again, I'm a resource for you if there's never like any type of consultation fee or anything like that. So if you're kind of on the fence about the exchange, you're not sure if it's right for your set of circumstances, you can just give me a call and we can kind of talk through it. And I'm even available if you need me to like get on a call with a CPA or your legal counsel, and we can always, you know, set up conference calls and engage in those kind of things.
Perfect.
Any questions right now?
Just one actually.
Okay.
And just one very quick one, because I know this is something that a lot of people will be pretty much having. Let's just say someone bought a house a couple years ago and was renting it out for $250,000.
Yes.
And at the moment of doing a 1031, let's just say they sold the property for $500,000. Would the next property that they have to purchase be at equal or greater value of 250 or equal or greater value of 500?
500,000. We're looking at the contract sales price of the property being sold. So that's a great question. Another thing to consider when you do a 1031 exchange, if you carry debt on the property that's being sold, you need to replace the debt on the new property of equal or greater value, or replace the debt with cash. Otherwise, you're taxed on the difference. So say you're paying off a mortgage as part of the sale. If you don't carry another mortgage onto your next property of the same value or higher, you could actually have to pay the capital gains tax, they call it, on the mortgage boot, okay? So you don't want any money to touch your hands. You want to always buy a property of equal or greater value, and that can be done with all cash, or, you know, obviously you can use a mortgage as well.
Perfect.
Yeah.
Very good.
Okay. Yeah. So now we're going to talk about why do a 1031 exchange. Obviously, capital gains tax, fairly substantial. So depending on what income tax bracket you fall under, you could be paying upwards of 15, 20% or more in capital gains tax. So that's thousands of dollars you'd be spending in taxes without a 1031 exchange. So you're basically throwing money away. Why would you do that? Right. You know, doing a 1031 exchange allows the real estate investor to reinvest into property that would otherwise, using money that would otherwise be spent on taxes. It allows for the exchange of passive investment into income producing property and diversification of your real estate portfolio. So let me give you an example of a situation where I had a taxpayer selling a property that it was just raw land. He acquired this property 10 years ago for $75,000. Pretty small investment, not huge. He bought this property hoping, it would appreciate in value. So it was an investment. Well, 10 years later, he gets an offer of $3 million.
Ooh.
This is fantastic. So he's got options now. Oh, I found out about this 1031 exchange. This is going to work for me. So this person who had this small investment become a large investment. So now he's looking at 3 properties to reinvest those funds into. So he doesn't have to deal with raw land anymore. He can buy a single family home, Airbnb one of those properties. He could buy a commercial property, maybe a warehouse or something, and use that for another property. And then who knows what the third one could be. Maybe it's a condo on the beach. There's lots of opportunity there. So you can kind of see where this can kind of lead you to, where he had this property, wasn't really doing anything with it. Now he's got income producing property from this one small investment. So great reasons to exchange.
Yes.
And then this is what qualifies. So again, any type of real property that's held for investment qualifies. It could be a single family home, obviously, except for your primary. For a multifamily home, it could be a vacant land for a strip mall, hotel for a farm. Some states actually have mineral rights that qualify as real property, and you can exchange that for an improved property. Water rights. In Florida, we have a lot of people that do exchanges on boat slips. As long as the boat slip is titled as real property and there's a deed to the property, you could do that. But any type of property qualifies. So there's no limitation. The properties being sold and purchased don't have to be identical in character. So that's pretty exciting, especially if you're selling a commercial. Like, we're seeing a lot of this too. We're seeing people selling large commercial properties, and they don't want another large commercial property. Maybe they want a couple luxury homes instead. Maybe they sold a strip mall that was, a few $1 million, and now they want to buy a few luxury homes or a few luxury condos in Miami. Why not? And you could really maximize things, with a 1031 exchange.
Janet, can I ask a question real quick?
Sure.
On that, like, we have a lot of pre-construction here. A lot of, well, not a lot, but we have 9,000 units coming up. Can they exchange it on something that is not finished?
They could, as long as the completion of the project is done within 6 months of the sale of their old property, because that's really crucial in a 1031 exchange timing. You're really limited. You have a 6-month window once you have to complete the exchange.
Correct.
So once you go to closing on the sale of your relinquished property, they give you so many days to pick new properties, and then you have 6 months to buy. But yeah, if the new construction, is tentatively, to be completed within 6 months, I would go for it. Why not? Why not pick new construction?
Okay.
For sure.
Nice.
Yep. Now, these are the rules in a 1031 exchange. Rule number 1, super important, properties being sold and purchased must be held for investment. Again, primary homes do not qualify. If it's a second home that's not being rented, second homes, you are limited on your personal use. But if it's something that's strictly a second home, most likely it would not qualify for tax deferral under Section 1031. But if you're not sure, talk to me. Also talk to your CPA, and they can help you with that. You have to use the services of a qualified intermediary. That's what Old Republic Exchange is. That's what we do. And anything that we're talking about today, no matter, because you may end up working with different qualified intermediaries, Felipe and Yadira, you might have that, but the same rules apply no matter what. But you do have to use the services of a qualified intermediary. This is not something your attorney can do for you. You can have an attorney represent you in the sale, but your attorney can't also be your qualified intermediary. Your attorney is disqualified from acting as your exchange agent. So it has to be an independent, neutral third party to facilitate the exchange.
Yes.
And then rule number 3, the taxpayer cannot have either actual or constructive receipt of the exchange proceeds during the exchange period. This is super important. Sometimes people do not know about the 1031 exchange. They go ahead with their sale, they get the money, and then they find, because you basically can't touch the funds. You know,
Right.
when you close on the sale and you do a 1031 exchange, we're stepping in basically by assignment as the seller on the sale and as the purchaser on the purchase. So the taxpayer is never touching the money. That's the main rule of the 1031 exchange.
Yes.
Yeah, because you can't defer the taxes if you don't have the intermediary involved with the funds. But if someone closes on a transaction without an exchange, it's too late. Okay. They basically have to pay the taxes, whether their intention was to do an exchange, but without rule number 4, without having that exchange agreement in place on or before the date of the closing on the sale, you do not have a valid exchange. Now, if you called me tonight and said, hey, I'm closing on my sale tomorrow, is it too late to do an exchange? Nope, because you called me tonight. We can get that exchange agreement set up and have it rocking and rolling first thing in the morning. So a lot of times timing is not a big deal if you call us in time. You know, that's the big thing. So even if it's an hour before closing, as long as the documents can be modified and we can have everybody sign the correct documents that reflect the 1031 exchange, like I said, on or before the date of the closing on the sale, even an hour before closing, you know, let us know. We can certainly make that happen.
Good to know.
Yeah.
Yeah.
Rule number 5, the taxpayer must identify within 45 days of the closing, and that's calendar days, not business days. So weekends count, holidays count, even Christmas counts. So you do have to consider 45 days, and your qualified intermediary should be helping monitor those timeframes for you as well. So within 45 days of closing, you have to identify replacement property. You don't have to be under contract in 45 days. You just have to name potential replacement properties. So you have the rest of that 180-day exchange period to get one or more of those identified properties under contract and acquired. So taxpayer must complete the purchase of one of those properties within 6 months. Otherwise, they could end up with a failed exchange. But this is super important. And anytime you're engaging in a 1031 exchange, you know, your qualified intermediary needs to be paying attention to these timelines. And you as the taxpayer should also be doing that as well. If you need proof of funds or anything like that from the exchange account, obviously the qualified intermediary can provide that information. If you as the investor are looking for earnest money deposit to go onto the next property, but you don't want to pull those funds out of your own pocket, you want those funds to come out of the exchange account, we can do that. We can just work on that on your behalf and send those funds out. You don't have to pull funds out of pocket if you don't want to, but if you do want to, that's fine too. But just know that can all be done through the exchange.
Perfect.
And then this is, yeah. And this is just your delayed exchange timeline. If you go out on our website on oldrepublicexchange.com, there's actually a calculators tab. So if you had somebody, if anybody's on the webinar, they're closing next week and they wanted to calculate what their 45-day ID period would be if they decided to do an exchange and what their 6-month exchange period would be, they can just plug in a closing date and our calculator will automatically generate those dates for you. Okay. But it's super important that you understand the rules. There's rules of identification that you'd have to consider as well. And that's something that, you know, I can discuss. And it all depends on your circumstances, how many properties you're selling and buying. So you could have someone selling one property and then using the proceeds of that one sale to buy 2 properties, or 3 properties like I had in that raw land example. Or if the timing is right, say someone on the webinar right now has 3 properties that are potentially all closing around the same time, and they want to use the proceeds of all 3 of those properties and put it into 2 or 3 properties elsewhere, do a 1031 exchange. You just have to make sure that all the properties sell within a rough, you know, the rough same amount of time, you know, like within 45 days of the first sale. You want to make sure those other 2 are at least under contract and everything's falling under that 180-day exchange period. So possible to include multiple properties, and always keep in mind, however you own property now, If you're selling as a single person, you're selling a property, you have to buy your replacement property under the same taxpayer. Same taxpayer who sells has to be the same taxpayer who acquires. If you're a new investor and you bought your first property under your individual name, what you could do is, if you wanted to, buy in an LLC, you can do that as long as that LLC is a disregarded entity. Like basically everything rolls up to you as the single taxpayer. So you could start buying properties under an LLC if you initially started as a single person. Did you know that? That's pretty cool. A lot of people don't know that. If you wanted to, say, husband and wife sold a property under husband and wife, but then husband and wife, you know what, we just bought this property for the first time as husband and wife. We want our replacement property to be maybe under our trust because we have kids and things like that. You can buy your replacement property under a revocable trust as long as it rolls up to husband and wife. So there's lots of different ways you can set up and structure your 1031 exchange, and also, getting with an estate planner to create a trust, and an LLC if you wanted to start doing that and buying properties that way. I would highly encourage you to do that. That's definitely something you definitely want to incorporate into your estate planning. A lot of people do this 1031 exchange, and basically the goal for them is to keep doing these exchanges until they pass away, and then the property passes on to their heirs at a stepped up basis. So all that tax is really forgiven, and your heirs get the property at whatever the fair market value is at the time of your death. So estate planning, working with those trusts, leaving a legacy for your kids or your grandchildren or family members. That's another great reason to exchange. I could go on for days about why people should do this, but that's a really big one for a lot of people. And this is just kind of like what we do as the qualified intermediary. We act as QI, qualified intermediary, as required by the Treasury regulations. Before the transfer of the relinquished property, we enter into a written agreement with the taxpayer. Pursuant to the terms of the agreement, we acquire the relinquished property from the taxpayer and transfer it to the buyer, and we acquire the replacement property from the third-party seller and transfers it to the taxpayer. So when you see a transaction that's part of a 1031 exchange, or you're new to this, you're going to look at your settlement statement. Normally it would say something like John Smith is the seller. Well, instead of John Smith, it'll say Old Republic Exchange as qualified intermediary for John Smith. I mean, it is as simple as that. It is not something that would add a ton of time to your transaction. Literally, it's just maybe one extra signature line, and all the work is done by us as the qualified intermediary. We work with any title company, any law firm, closing, real estate attorney. We work with pretty much everyone on this, and it's so simple. It is such a simple process. I think when people hear 1031 exchange, they immediately panic. It sounds complicated and scary, but it really isn't. But we prepare all documents necessary for the exchange. You need an exchange agreement, the assignment agreements, those things. So we even do those assignment agreements. So even as the realtor, you don't have to do that because we do it for you. We consult with the taxpayers' tax advisors. We execute closing documents as the seller in the relinquished closing, as buyer in the replacement property closing. We hold those proceeds to prevent the taxpayer from either actual or constructive receipt of the funds. And we coordinate with closing agents, real estate, tax, and legal advisors. So we're pretty much a one-stop shop for that.
Yes.
Just couldn't get that out there. And then just as a recap, benefits, obviously, remember what we said, deferring capital gains tax. That's the biggest thing. So if you're kind of on the fence, you're not sure if you want to do an exchange, talk to your tax advisor, get those calculations, find out what you'd be paying in capital gains tax without an exchange and what you'd be saving if you did one. Leveraging for wealth building, relocating assets like that raw land example, and estate and tax planning. Like I said, the goal for a lot of individuals is just to keep deferring taxes for life. And when people hear that, they get so excited. It's just an exciting thing. And that's what I'm here for. I'm here to get you excited about 1031 exchange, because that's what we all need to be considering this for sure. So when you're selecting an intermediary, there are a lot of good qualified intermediaries out there, but you know, you also don't want to just blindly select a company on Google or anything like that. You want to work with an intermediary that comes from a trusted referral source. That could be your realtor, it could be your attorney, it could be your title company. You want to make sure that the 1031 company is in full compliance with Section 1031. You know, being on this webinar today, that an agreement with the qualified intermediary has to be in place on or before the date of the closing on the sale. If anyone tries to deviate from that and tries to say, oh, you can do it after closing, that is not accurate information. So if you're not sure, even if we are not involved in the 1031 exchange, if you want to use this as a resource, maybe your attorney found someone else and something's just not setting right in your gut, call me as the 1031 lady and your resource, because I'm happy to do that. You do want to look at the financial security and experience of the company handling the exchange. Just to give you some information as a comparison, Old Republic Exchange's parent company is Old Republic International. We're on the New York Stock Exchange's ORI, which is a multi-billion-dollar corporation. We also carry a $50 million errors and emissions policy, and we have the highest fidelity bond coverage in the industry at $120 million. So when you're working with QIs, ask them what type of errors and emissions coverage they have in place. Ask them what type of fidelity bond they have in place. Ask them what is guaranteeing the security of my funds. You know, what kind of things are in place, and also ask to see copies of those policies. You know, Old Republic Exchange, if you called me and said, hey, I need to see your fidelity bond policy, I need to see your errors and emissions, I'm going to send that over to you. As an added layer of protection, we also will issue a letter of guarantee, which indemnifies the taxpayer against loss should something go wrong with the exchange. And now that indemnification letter does not protect against bank failure, but do know we only use FDIC insured pooled trust accounts. So all of your funds are not sitting into one bank. So we kind of spread your funds out. That way you have the security and the blanket of that FDIC insurance. So say you close a transaction, say you received $500,000 or you had $5,000 or $500,000 in the exchange account. The first $250,000 would go into Bank A. The surplus would go into Bank B, and so forth. So we have trust accounts set up on your behalf. So you have that security blanket, that safety that you know your funds are protected. So that is really important. You don't want a QI for anyone investing your funds or doing anything weird like that. So just, you know, always ask questions. You know, how are we holding funds? What are we doing with it? That kind of thing. So super important on how you are selecting your intermediary. And then that's just my contact information. I have my little QR code, so you can download that information, and you know, you can text, email, whatever is your preference, and we're happy to help.
Awesome. Awesome. Well, thank you, Janet, for all that information. I mean, for our audience today, that's going to be super beneficial. And then really the 1031, like you said, is not as complicated as, you know, it may seem or it may sound sometimes, because obviously, you know, a lot of times 1031, oh, it's just, you know, there's a lot of paperwork and all this stuff, a lot of different steps included. And you hear that quite often, but obviously working with an expert like you obviously makes everything just much smoother transition, and really wow, there's a lot of benefits to it, and the easiness of really using it is quite outstanding.
It's so easy. It's so easy. And the first time you do an exchange, you'll say, oh my gosh, why did I not do this before? This is so easy, especially when you have someone to go to and you have a resource. So, and like I said, in working with you know, an experienced realtor that knows when to see opportunities and even help locate properties, that's a big deal too. You know, it drives me crazy when people go, well, I'm going to try to find a property on my own. No, you don't ever want to do that. You want to go with an experienced realtor such as yourselves, for sure.
Yes.
Thank you. And
you're welcome.
Well, thank you so much. I mean, and that's because there's so much more to talk about, the different types of exchanges and why not, but we're going to leave that there. So for anyone that is really looking into doing this, we call it planting a tree in Miami. This is the time to plant a tree here, to purchase a property in Miami. So again, there's the information for Janet. There's Felipe, myself. So please feel free to call us and we will get you with Janet to help you out. I am so excited about this to refresh my memory because it's really good information.
Yes.
Yeah,
yes.
if you want to do another class, let me know.
Yeah.
Of course, Jen, and obviously we'll be in touch with all the people that are interested to be able to schedule a meeting with you through us. That
Of course.
we can certainly help them out with that, and make an investment here in Miami be much more beneficial and a much better investment than you can possibly do without a 1031 exchange.
Correct.
So, well, to all of our audience that are here right now, and well, for the people that are watching this recording, well, if you want to get in touch with us, please feel free to contact us via phone number, email, whatever is easier for you guys. We'll be happy to help you guys out, be able to give you guys the best counseling, the best type of service that we can possibly give you guys. And well, Janet, again, we want to say thank you very much for being here, for giving us all of this information that really, it's just very beneficial for anyone that is looking to invest in real estate, especially at this very moment here in Miami, that it's just the best market that you can possibly invest in at the moment. And yeah, well, I hope to see everyone next week at our next webinar, which will be giving a lot more very beneficial information as well in regards to real estate investing here in Miami. Yadira, do you want to say anything else?
No, thank you so much for the time. And yes, we will be seeing everyone next week. And if you want to take a look at this again in more details, go to our YouTube channels.
Awesome. Thank you, Janet.
Thank you both. Thank you for
Appreciate it.
having me.
Have a
Thank you,
good
Janet. We
night. Take
appreciate it.
care.
Take care.
Bye.
Bye-bye.
Bye.
Bye.